a good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Nikunj Dalmian, cruising around comfortably above that mark of 24,200. In fact, at the highest point of the trading session right now. So a lot of green on the screen, and of course, there has been a bit of a inch up as far as volatility is concerned. So you have the India VIX, which is now closer to 15. But then there is that macro environment, which is a bit unstable to the extent that GDP number has come in lower than expectation. There is that fear looming above the BRICS countries with the kind of commentary coming in from Mr. Donald Trump, and that has sent rupee in a tizzy. So rupee is, of course, at record lows. And then sector-specific moves coming in where real estate is doing rather well. We have good amount of traction in pharma, and a lot of cement names are actually doing well, whether it's an Ultratech cement, whether it's a JK cement, JK Lakshmi cement, ancillaries like Grasim, etc. They're all in the green at the moment. Financials as a space is underperforming. So whether it's the PSU banks, whether it's private banks, even NBFCs for that matter, they're all on the back foot today. But the broader markets have joined the party. So if you look at the small cap index, that one is outperforming. Mid cap is holding up in the green, and good amount of recovery even on Bank Nifty right now from the lows of the trading session. But clearly it's the frontline index and the broader markets which are taking away the cake right now. So good setup that we have at our hands, Nikunj, and from the days of, the lows that we had seen of November 2021, we have come a long way from there.
We've come a long way, and we've come a long way when the tilt of the news has not changed dramatically. So Adani stocks, they managed to climb the wall of worry. Global markets, that long-lived Trump rate is still intact. China, long-lived China comeback trade has not reversed. But despite whatever has been thrown at the market from October to November, I think markets have solidly managed to make a base, and that's what markets are. They surprise you, they challenge you, they test you, and when you pass the test, you're handsomely rewarded. So for those who actually have not sold out anything in last 3 months, it's just like a nightmare which seems to be getting over. Deepak Shenoy, is the nightmare over, or the nightmare will come back again? I mean, for long-term investors, how should we look at last 3 months?
I think, it's an interesting thing that we call it a nightmare, because I think it's been tough for people who perhaps haven't seen steep falls in the index. But I think it's overall, if you're like you've seen 2008, you've seen 2013. I think you're apart from the 2020, I'm talking about steeper falls. I think those times were tougher than this, way tougher. And while I would say this is a bad dream, those things would be nightmares. I think, yeah, I mean, we're down. We went down to 10%. We came back up. The GDP numbers are problematic, but I think part of it had to do with the relatively slow recovery from the post-election result phase, when you didn't get as many capex orders. The budget was end of July, so there wasn't that much from the government expenditure moving, though government expenditure did propel some of this space. And the manufacturing numbers were relatively low. Again, I think this is because of close down of some of the government orders at that time. Since then, we are seeing a bit of a recovery. I think markets will, kind of price in some of these things in terms of a recovery, which is why the market has probably gone up. I'm very surprised that the market has gone up today, despite the dollar rising more. Despite, perhaps even the manufacturing companies, you're seeing pretty sharp increases in prices. So I think maybe the market knows a little more, but it seems incongruent to the economic data. And inflation numbers actually in the September quarter seem to be much lower in the government GDP accounts than it seems to be on the CPI. So there is a bit of a dichotomy there as well.
All right, Kunal, is today's price action impressive, or today's price action is something which actually raises more question mark about ability of the market to hold on?
No, I think it's neither of the two, because it's it's something which I have probably anticipated in the morning, that we may not see a very rare kind of a day for the indices. We may just about see the index getting into a range. I think except for the last half an hour where there's been some pickup of price action for the Bank Nifty, largely the session for the index today is more on the market breadth. And right from the start, the market breadth was 2:1 for the index, for the overall markets, and it's maintained that kind of a market breadth. So I think that's the more comfortable and a positive sign for the index. which means that what we are looking out for over the next maybe few days, over the next 1 or 2 weeks, is a broader bit of consolidation for the indices coming out. So, we are settling into, ranges for many indicators. For example, the India VIX, which was at 17 and a half odd levels, we're settling into a range where the India VIX is settling around the 14.5 to 15 odd mark, and that's a positive sign. So till the time we see lowering of ranges for India VIX, there could be a possibility that the index may keep on giving you those mild breakouts for itself. You have 24,000, 24,500 as now the strong hubs, where there's been put writing as well as call writing respectively for the indices, which means we are looking at a midpoint range of 24,250 as a pivot for the Nifty, and even for the Bank Nifty, some bit of strength coming back again around the 52,000 mark. So I think on the back of this, the overall market breadth and slight improvement of indicators across the board, I would believe that we should consolidate further.
Consolidate further, but just taking stock of some of the stock specific moves today. So Dixon Tech is in focus. Of course, that mass production of Google Pixel smartphones is something that has got the street excited. So that stock has been holding up since the start of the day, 5% higher. Ola Electric has seen quite a bit of bounce back from the lows of the trading session. When we started, it was down about 2 to 3%. Now it's in the green by around 7%. The company has come out with the plan to accelerate the distribution network, a fourfold expansion of the company-owned store to 4,000 by December 2024. That was the latest tweet that came in from Bhavish Agarwal, and that's the reason that stock is on fire right now. And then cement stocks are building on to gains. Ultratech Cement, JK Cement, Shree Cement. Jeffrey says that cement prices are likely to go up by 10 to 15 rupees per bag in December, and they're calling out the bottom of the pricing of the cement pack, and that's the reason all of these names are excited. You also have a Torrent Power in focus because reports and agencies are now reporting that perhaps a QIP is imminent on that one. There has been some news flow around that already, but now we understand that it can happen as soon as this week itself. There's a bit of a traction on IRB infrastructure. Affle India is seeing quite a bit of traction at the moment. Happiest Minds is up 7%. So across the board, good amount of traction coming in. But Ola Electric is what I want to discuss with you further, Deepak. What's the take? I mean, people who have so-called burned their hands with bad servicing, that, kind of becomes a problem area for the company. But they're doing a lot, whether it's expanding the distribution network or coming out with now new products which are a lot more attractively priced, maybe for the gig workers, etc. Would you now look at buying afresh in Ola?
It's interesting, but I'll tell you two things that are happening here. One is there is a customer's disservice set of complaints that seem to be coming across. And I mean, I hope the company is handling it in a better way. Hopefully it will move in. But when you have an expansion from 600 to 4,000 or, the numbers that have been put out, this is usually, this is a feat of execution that kind of talks about, but typically something that moves as fast as this will have a lot of initial problems. And when you have a scale of 600 to 4,000, the magnification of those problems is even huger. So if you're facing customer service complaints already, I can imagine that this will only go up in the future. So I think while people are very gung-ho about the number of stores opening up and perhaps more business that will start moving because of the newer products they're starting to launch, my feeling is that some part of this will also get overweighed by potential, the problems in growing too fast will probably appear in 2 or 3 months down the line once the operations start to actually get underway. So I would just be very. Plus another big problem is that Ola Electric is not yet finished 6 months after listing, and a lot of companies in this space, at least the startup companies, they tend to have a lot of these VC type investors who may not necessarily be able to be part of the company after their lock-in periods are over, which is after 6 months after the list. So I believe that might put some downward pressure on the stock. You'll see this happening even now. Stocks are moving 5%, 4% down and then 5% up. So there's a lot of volatility. I'd rather wait for this whole thing to settle down before I take a call on whether I should participate. I think we like the space. The electric vehicle space itself is very exciting. The fact that they have products at a relatively affordable price is exciting. I'm just not sure so much about the investment thesis here. So perhaps great as a consumer if they get their service act together. But as an investor, I'll just still wait and watch.
Is it like buying Zomato at 50 rupees? Is it like buying Policy Bazaar at 400 rupees? Deepak, nobody believed the value of those franchises, but when they came back, they surprised everybody. Could the decline in Ola, for those who bought this in winter of 2024, will they be rewarded by next summer?
No, I hope they will. I don't think there's a reason for me to say they will not. So I think the problem really is the whether market expectations and deliveries are two different things. Sometimes, of course, some of the plans are so audacious and big that if they actually prove right, you could see this company valued at a much higher price. But I feel in the near term, you're going to have more trouble than you are going to have. You're going to have the upsides. So the accolades may come only much later. So I'd rather wait till some of these things actually show some kind of result. I know that it's tougher, I mean, to run a company than to perhaps comment on it. So for them to actually bring this execution to a point where it excites investors even on the numbers front rather than just the announcements front, that I think will take some time. So as an investor, I prefer to get in at a point when some of this is visible. I may get in at a much higher price. That's fine with me. I don't have to catch the bottom because you don't know where the bottom is. It sometimes can be much lower from here, and we don't know whether this is the exact point at which rock bottom has been hit. And I prefer to see when the numbers react. So a little bit more upside momentum would work for me, both on the price and on the business front.
Since we are talking about some of these latest IPOs, Deepak, let me pick your brains regarding Swiggy as well. The stock actually, post its listing was a bit quiet, but from that it's picked up quite a bit. It's now closer to $500 a piece. It comes out with its Q2 earnings tomorrow. Wouldn't ask you as to what your expectations of earnings are, but overall the thesis on the company, would you recommend staying with the so-called leader of the pack, which is Zomato at the moment, or do you still see value as far as Swiggy is concerned?
The Swiggy is cheaper, Anisha. I think that way you're clearly getting a much lower cost, a lower price company in terms of multiples of in whichever way you kind of analyze the company. But there will be some issues. For instance, Swiggy will have a lot of the overhang that Zomato has probably already passed through, which is the stock option based compensation, non-cash losses that will be visible on the balance sheet because some options have been granted to the top shareholders of Swiggy or top management of Swiggy, which I think will cause some kind of negative on the numbers, at least the headline numbers for a while. So that will be a negative for a short time. Again, the same problem of Swiggy investors wanting to exit, employees wanting to cash in their holdings. That will also play a role in what the stock does after 6 months. The numbers will probably look good because they've been able to increase their take rates both as platform fees and from restaurants as well, reduce discounts somewhat. They've been able to keep order counts relatively high. I will have to see based on how the results come tomorrow, how they're able to shape up. But I think what will be interesting is to see how big Instamart plays in their overall operations. It's given that it's kind of like the third largest player in the segment after Zomato's Blinkit and Zepto. We'll have to see how they are planning to shape up that offering. I think it's a very interesting play. And I also think here that you want to give this company at least 2 quarters of announcing results. Although they've you probably have used them as a customer, we haven't seen them as much as an investor. So after you see 2 quarters, the 6 month holding period will also be over. You'll be able to appreciate how much liquidity is in the stock and how much more news comes around. I think that's when you want to kind of make longer term bets on the stock. I'm more concerned that we're actually operating blind right now in terms of numbers. Recently, we just have the IPO numbers to go with. Let's see what comes out of tomorrow. I think the headline numbers will be more negative because of the non-cash impact of options.
Okay, point taken. And that's the view coming in on Swiggy. Let's quickly mark some of those heavyweights as to what they are up to, because HDFC Bank was underperforming at the start of the day. Is it now at least batting a bit for the Bulls? That's something to watch out for. And then the other heavyweight, of course, is Reliance. What is that one up to today? The bulk of the heavy lifting is actually being done by Infosys, and then Ultratech Cement, which is up 4%. But L&T, HUL, Cipla, these are in the red right now. A quick break and we'll be right back.
In conversation with Deepak Shenoy, Kunal Botra, and then Soni Patnaik. Soni, what do you make of the market recovery? We closed on Friday off from the day's high. Looks like today we are close, all set to close at the day's high. So do you think now levels like 25,000 are in sight?
Hi, good afternoon, Nikunj. Thank you for having me on the show. So I think Nifty is just about the resistance corner of 24,300 to 24,350. That range is a very strong resistance zone. If it crosses, we can see it heading towards 24,500. But on a positional basis, if these two resistance levels are taken out, then Nifty can test and head towards the 25,000 mark, which would be on account of a very strong short covering. So I think one can hold longs if they are already holding, from the December series of the first day itself. So 24,000 makes a very strong support. So I think 24,000 with that support and base, one can hold on to the longs, and there could be a positional target. But after maybe one day or two of a consolidation sideways trend, it can head higher towards 24,800 to 25,000 levels.
That's the take as far as Nifty is concerned, and HDFC Bank is one of that clear leader that Kunal has been talking about as well, and Nikunj has been talking about that 2,000 par on HDFC Bank. Looks like it's likely to come sooner rather than later. But what about cement as a pack, Deepak? Because and I know it's not the first time that we've heard of this. I've been hearing it for the last 6 months, but there's that talk about light at the end of the tunnel and pricing bottoming out. Would you buy that argument finally, just because it's something which is so cheap right now?
None of it is. In fact, I think we're seeing very high valuation numbers in some of the stocks. Of course, some of the South Indian stock cement majors are also kind of increasing in price. Though they didn't fall quite as much. We're seeing all-time highs in a few cement stocks as well. I think overall, the September quarter would have anyway been bad because of rains. So you're looking at, generally there'll be a lull in construction during the rainy season. So cement sales don't happen to be that much this time. This season should have seen a reasonable recovery. And I feel that, I don't think meaningfully demand is so high that you're going to be able to increase prices meaningfully. But there is a cartel that operates in cement all over the country. So to that extent, if they decide that prices will be raised, then prices will go up. So I think stock prices typically tend to lead some of the early business indicators here, largely because there is, some layer of cartelization of cement prices per se. So I would say, I don't have any investments in cements in our fundamental portfolios, but it appears from price action that it's possible that the fundamentals start looking to get better if they're able to increase prices. I don't know about light at the end of the tunnel, because typically as you increase prices, if you find demand drops off, you will be very quick to drop prices or increase discounts as well. So it will only be time that will tell that. I think temporarily, at least, nothing seems to be wrong or going wrong meaningfully for cement companies. So I think if the economy recovers, they will recover just alongside. Don't see anything special on a trigger there, to be honest.
Bank, Reliance Industries. Now, when these two horsemen they start moving in the same direction, then you can be reasonably assured that markets are in a good shape. These are the underperformers which are now coming back. And every time I say Reliance, Deepak feels happy. Now let me say LIC, which will not make you feel happy.
Yeah, it's LIC has been right there. It's I think the news recently has helped it about the fact that both the finance minister have mentioned banks mis-selling of insurance, and also IRD expressing concerns that some insurance companies derive most of their insurance proceeds primarily from companies that are banking companies that they are involved with. So an SBI Life would have an SBI and so on. So the bank assurance platform forms a significant portion of their incoming premium. And I think if they wanted to restrict that or tell companies to reduce that influence, then they would have to set up a workforce by themselves, which is something they're not used to do. Independent agents are not quite as big in these companies as it is in LIC. LIC stands to benefit in that way. Recently, of course, benefits from an LIC perspective have been that they've increased market share marginally. They have been able to get good premium growth, 20% plus in certain cases. And they have been able to move up the needle from a 3 or 4%, less than 10% at the time of IPO that they've had of non-participating policies to up to nearly 25% now, which is what they had promised. This year, the last quarter is going to be much better, I think, because they will be able to charge a slightly higher amount of the profits. They started off with 5% of the profits of participating policies that shareholders could get. That will increase to 10% over a period. I think now it's at 7.5. So going forward, I think the last quarter of this company for this financial year and the next financial year should reflect a higher take rate from the shareholder policies. The problematic element for me is that it's a discretionary element when they decide how much profit should be left in the policyholder's account for appropriation later versus how much is actually taken into a quarter in to the shareholders account this time. They have increased their solvency ratios nearly 2 times, which is quite high. And therefore, a lot of the profits, extra profits are remaining in the policyholders account. They've not been transitioned to shareholders at all. I think that is where, the discretionary element poses a problem to me, because otherwise this company should be a 40, 45,000 or even 50,000 crore per year PAT number easily. Given take out that risk, and I think the company should be a fairly decent dividend paying company going forward.
Let's see which way it goes. But before I kind of take it across to Anurag to get more details on what's brewing in the entire policy side of insurance, Kunal quickly wanted to come to you regarding Dixon Tech. That stock has hit the market capitalization of 1 lakh crore for the first time, and it's charging ahead right now. And Affle India is the other one. What's the verdict on Dixon hitting that 1 lakh crore market capitalization and Affle India?
Yeah, so I think Dixon is looking very attractive even at current levels. The stock in the last 2 weeks had gone through a very classical kind of a breakout. So an initial breakout level of 15,000, 14,750, then a move towards 15,500 mark for Dixon Tech, followed by a couple of days of consolidation. And now the stock has confirmed a breakout even above those 15,500, 15,700 mark, which means that over the last few weeks, we've seen the base or the supports rising up by a margin of 1,000, 1,200 points for Dixon Tech from 14,750 to now 15,750 odd mark. So keeping that as maybe a stop loss or a support point, traders could look at a buy even at current levels. Affle, on the other hand, today is a classical sign of a breakout. It's a triangular pattern breakout for Affle, and it's almost like a 200 to 220 pointer pattern for Affle. So I think closer to 1,500. 1480, 1520 thereabouts is the support for the stock, and 1700 thereabouts is the breakout of this triangular pattern. So and today's volume is apparently one of the higher days for the stock in the last 2 to 3 weeks of the price-wise consolidation. So on the back of this, we could expect maybe another 100 points up move for Affle over the very near term.
At record high for Affle, Dixon, Keynes, CAMS, Suvin Pharma. All of these stocks, including KEC and Divi's Lab, are all sitting at all-time high levels. So despite the so-called weakness in pockets, there are certain of these companies which are at record high levels. But just coming back to insurance and taking it across to Anurag, because there are a lot of policy changes which are underway in the sector. What's been the latest one? Let me take it across to Anurag to find out more.
So for the Insurance Act amendment, government is proposing for removal of restrictions for agents to work with multiple insurers. Presently, the rules allow that agent can work with only one life insurance company, one general insurance company, and one standalone health insurance company. But the government has proposed to remove these restrictions, and in the draft bill, government has proposed that multiple agents can work with multiple insurance companies. To have the innovation in the insurance industry and to give the flexibility to the agents to work the work with multiple insurance companies. So if we talk about the share of business through individual agent for the listed companies, then LIC get around 95% of their business through agents. For SDFC Life, 18% of their APE is through agent. For ICICI Pru, around 30% of their new business is through individual agents, and for SBI Life, it's around 25%. So agents play an important role for insurance companies for their premium collection, for their new business, and now government is proposing to give them flexibility that an agent can tie up with multiple insurance companies.
Rock for that, but time now to take the closing trade ideas. Sony, you go first.
So my first idea would be in Jubilant Foods. Now the stock has been consolidating in a range, and here's preempting that if it crosses the 660 mark, you can see it heading higher towards 685 to 700 range. So one can buy Jubilant Food in futures and keep a stop loss of 642. Look for higher targets of 680, 85, and the second higher target would be around 700. The second pick would be in Apollo Hospital, which has seen a fresh breakout today on intraday charts, and it has also crossed its short-term moving averages. And it's also option chain breakout in Apollo Hospital can be seen. So one can buy Apollo Hospital around 70.60, and on small declines up to 17.40, keep a stop loss of 7,000 from current levels, and a target of 7,200 to 7,250 can be seen.
Okay, Kunal, your recommendations?
Ban Piramal Enterprises, after a pause of the last 3 days where the stock had been correcting, it's come back again into a mild breakout mode. Yet to break out of the previous swing high, but I believe that with volumes coming back and with the price action stabilizing at the 1190-80 mark, I believe a solid base over the near term has been established. So would suggest a buy on Piramal Enterprise, expecting the stock to move towards levels of at least 1300 to 1350.
Okay, so that's the take coming in as far as Piramal Enterprises is concerned. If I have it right, the company did participate in a couple of roadshows last week, and overall the interest was quite high from the long-only investors and hedge funds, and the takeaways have been positive. At least that's the word coming in from one of their brokerages as well. Quick break, and we'll be right back with more for the last 30 minutes of the trading session.
All right, Nitin Raj also joins us. Let's take our conversation forward. Nitin, we've seen quite a bit of a shakeout in equity markets. Do you think the excesses in the market are over? It's time now to look up and time to start investing again?
Well, the excesses in certain pockets of the market are surely done. But even, when you look at it from a post-excess perspective in some of the segments, such as the defense stocks, or if you look at some of the PSU stocks, you don't really find the valuations to be where they've historically been, or they get sort of pretty much elevated. So while you've had pretty deep corrections in a lot of parts of the market, but that's not necessarily made the market really cheap as such. And as far as the small caps are concerned, we haven't really seen too much of a correction there. So I think we are yet in the phase where you will see continuing rotational corrections that will keep on happening. At least the way I see it over the next couple of quarters.
Okay, next couple of quarters, that correction might just continue. For now, though, it's doing quite okay. Castrol India is sitting with a gain of around 7%. Inox, Wind is doing quite well. Inox Group actually held their, capital markets day sort of thing today. The Vision Day, perhaps, and that's the reason some of these stocks are reacting to that. And Torrent Power is up around 5%. What's interesting today is the kind of, off-low kind of performance that we have seen from Ola as well as Home First. Home First was down and out, but look at the stock right now. That one is doing quite well. Sony, comment on the charts of these two stocks, Ola Electric as well as Home First.
If we look at Home First, the stock has been in a good intraday uptrend. One can say it has sustaining above the 1,030, 1,035 resistance. Now the stock here may face a resistance around 1,100 odd levels. If that level crosses on a closing basis, it can head higher towards 1150. So one can keep an eye. It is just crossing and closing above a 200 exponential moving average on closing basis today. So I think that would be very interesting to watch. And the moment it crosses above 1100, you can see it heading higher towards 1150 plus levels. If we talk about Ola Electric, then of course, the stock over here is just at the corner of its 200 EMA, and if it closes, on closing basis, if it holds above the 93.2 level, then the stock can again recover and bounce back towards 102 odd levels. So I think that's an important level to watch out for. From immediate basis, the support is actually around 88 and 85. So these are the two major support levels to watch out for Ola Electric.
Okay. Nitin, where are you on some of these new exciting themes, green, clean, which will make companies very efficient in terms of the energy dependence? Is that a good theme to be in, green and clean?
Look, I think clearly the road ahead is going to be good for the kind of investment that is going into green energy, and more so within that, if you look at what's happening within solar and wind and so on and so forth. My only concern is got to do with the kind of valuations that are currently existing in some of these stocks. Let's not forget that while these businesses are doing well, essentially when you talk about things like solar panels and so on and so forth, they're essentially commoditized businesses. And currently, thanks to tariff barriers that have been put in place by the US on China, we are seeing an opportunity for Indian exports. Now, that's good, and that means that Indian companies should do well over the next few years. However, for a business where there are artificial tariff barriers, even with all the growth factored in, what's the kind of valuation that you should land up paying? I think that's my major concern. And today, the market is sort of rewarding them with really sky-high multiples, which in normal case, wouldn't sort of hold true.
500 points is what the bank Nifty has recovered. Kunal, what levels are we talking at? I mean, realistically speaking, for the bank Nifty and for the Nifty before the year ends?
So at least 1,000 point higher from current levels.
For bank Nifty?
For bank Nifty.
वो तो कुछ नहीं है.
So 53 and a half.
That's 2.5%.
That means 1 month you don't expect a big rally. 2% in a month is not great. It's good, but not great.
Yeah, it's not great because the prime reason for that, Nikunj, is that we don't have active participation across too many large cap names. So I think except for the SBI and HDFC Bank, you look at the charts. We look at the charts for so many of the other names: Axis Bank, IndusInd Bank, Kotak Bank, etc. There is hardly any major signs of trends emerging into these names. So till the time you'll have just dependence on maybe 1-2 heavyweight stocks, it's going to be difficult for Bank Nifty to really show signs of a breakout. You look at the last 1 month of price performance, there have been 3 attempts and 3 big attempts for Bank Nifty to try and surpass levels of 50 to 500, 600 mark. There have been intraday breaches for the Bank Nifty, but we failed to surpass those levels. So, typically what happens is when a start of a fresh expiry happens or you are looking at a calendar year end, then the Bank Nifty may come back towards a breakout mode of the previous resistances. But the entire, bigger targets for Bank Nifty would be dependent on if the other private sector banking names or, maybe PSU banking as an overall pack, if they start to make a strong comeback. So far, looking at the signs, it's just maybe 2 out of the 5-7 heavyweight, large cap names which are taking the, the onus on themselves. And I think that's one of the reasons why I'm not very, very bullish on the Bank Nifty, but yeah, very bullish on the individual 2 components, HDFC Bank as well as SBI.
Okay, point taken. What's wrong with Emami today? That stock is coming under pressure, an acute one at that, decent amount of volumes as well. If I have it right on my screen, an 8% cut coming in on Emami. Even Varun Beverages for that matter is down, but for what it's worth, Varun Beverages had run up quite extensively post those couple of acquisitions that they had made. So it's kind of petering a bit, still around that 630 rupee mark. Nitin, which end of consumption you're still bullish on and which end are you staying away from?
Well, consumption has done very well, especially high-end discretionary consumption, especially in sectors such as if you were to take hotels, you take airlines, travel. That's a segment that has done well, and I think that segment will continue to remain buoyant and do well. I think luxury consumption, and this is very interesting because it's normally it's done exceedingly well over the last 1 year in India. So whether you take automobiles, whether you take real estate, I think it's much more resilient considering that the targeted consumer segment is generally not as impacted by inflation or even interest rates. However, what we are starting to see is the run-up in prices of luxury consumption goods that has taken place because of all of this. Globally, this is expected to be a tough year for luxury consumption after the past 1 year, which has been really good. And that's primarily because prices have run up and consumers are now starting to, downtrade a little bit and so on and so forth. But, from our perspective, we continue to like segments which have more experiences driven and hence travel from a consumption perspective. We like select parts of automobiles out there. And we think, even luxury malls should continue to do well. So I think by and large, high-end consumption, which is the top K, will do well, while the consumption which is at the bottom end is struggling, and yet continues to struggle. So we are not seeing too many visible signs of that, especially urban consumption.
About urban consumption, the next one that everybody is watching out for is Pushpa 2 apparently, because I was just going through the note that was coming in from Nuvama and what Abneesh is saying. He's saying it's going to be a very strong revenue driver for PVR. It's expected to do the net box office of 165 crore on day one itself, and the opening collections are likely to exceed over 200 odd crores and 300 crores if you're looking at the global box office. I'm not sure if you guys had watched the Pushpa 1. Kunal, you must have, right?
Yeah.
And would you go for Pushpa 2 as well?
Yeah, definitely.
Had you watched? Yeah, even I didn't watch, and I'm not too sure whether I'll be going in for the Pushpa 2 as well or not. But
I'll wait for it to come on OTT.
I don't think I'll even watch it on OTT. I don't think it's my kind of movie. But nonetheless, Soni, what about you? Not on the movie as such, but on the stock price of PVR?
So if you look at the stock price of PVR and the way it has been holding around the 1580 to 1600 level, so that's very important because in option chain we can see that 1600 1610 is a resistance. So if it's not able to cross that level, the stock can again come down towards 1550 odd levels. The next leg of fresh upside can be seen if it crosses the 1610 mark. So above that you can see it heading higher towards 1680 as well. So I think it's important. It's just loitering around its resistance area, and maybe the break comes above the resistance, and then you can see the next leg of rally.
Okay, point taken. So that's the view coming in as far as PVR is concerned. But just wanted to take stock of some of the other big movers right now. On the gaining side, Castrol India is doing quite well. Intellect Design is perking up. In fact, some of these niche names, the likes of Intellect Design, Affle, Happiest Minds, these are the ones which are actually doing well in the trading session today. While on the losing side, as I pointed out, Imami was under pressure. Some of the Adani group of companies have also tumbled. So gas and transmission, they are down and out. And then Ujjivan Small Finance Bank and the rest is also in the red. Nitin, this entire MFI space, and the asset quality issues, do you think that's got enough factored by the street in the stock prices, or do you think this is going to be a long drawn cycle which might extend over the next 2 to 3 quarters?
Well, if you go by anecdotal sort of history, these cycles are pretty fast. Even the previous MFI cycle and the up cycle that took place was really fast. And before we know, we've sort of entered this whole down cycle phase. So I think another couple of quarters is what we possibly gather when we talk to some of the companies or when we read commentary, is what we will see this whole cycle bottoming out. But at some stage, I think a lot of the valuations of some of these stocks is starting to sort of build in all of this. And I wouldn't be surprised if stocks actually start turning around at some stage, even before you get the clear signal of the turnaround of the sector.
Okay, point taken. So that's the view coming in as far as some of these lenders are concerned at the moment. What else is happening in the market? Well, overall, it's a very broad-based kind of theme, but industrials as the pack is doing well. So Dixon Tech, Keynes Technology, you also some of the other manufacturing verticals which are actually doing well in the trading session. And real estate too is perking up. In fact, Voltas after a while has come back on the radar with that 4% up move that we are seeing. Kunal, what's your take on some of these names, the EMS companies at that? I mean, Keynes, Sirma SGS, Dixon Techs of the world?
And these stocks have done phenomenally well. Keynes, I've been tracking the stock also. I think closer to 5200, 50 to 50 mark was the recent breakout for Keynes, and post that we've seen the stock just about gaining a lot of strength. So we looked at the average volumes for the stock as compared to the average volumes over the last 3 months, 6 month and 9 month time span, and we've actually seen that when the markets were going through a phase of correction, these stocks had seen a good inflow of volumes or much higher volumes than the previous averages over the last 3 months to 6 months period, which means that the mild dips into these stocks were bought into, the retracement for these stocks was just about limited towards the 50-day moving average, and that was at a point when the indices itself had come back towards their longer term 200 DMAs. So that showed the signs of resilience as well as relative outperformance. So not a surprise that Dixon Tech, Sirma as well as Keynes and many of these other names, these stocks are hitting their fresh lifetime high levels on the back of higher volume. So expecting this trend to continue for these stocks.
Nitin, how much more for this manufacturing theme to go up? Do you think this will be a multi-year theme which will chug along?
Look, Nikunj, I think manufacturing is here to stay. I personally think this is going to be the renaissance of manufacturing as a theme. Now, within that, which segments will do well is something that we need to look at separately, also considering some of the valuations that have run up. But clearly, if you look at what's happening globally, I think supply chain has become weaponized by most countries. And that's forcing a lot of countries to look internally, develop their own manufacturing and own supply base. So clearly manufacturing is here to stay, which in itself is not bad from an India perspective, considering the employment potential that manufacturing enjoys. The only concern is, for example, we talked about this whole EMS space. If you're investing today, you need to be cognizant of one thing, that there is virtually for slip up. So if you have be ready for brutal corrections, which only means that, I think you will see these companies do well over periods of time, but you should be investing with an extended horizon to factor in the short-term volatility that could happen at the business level.
Nitin, what do you think is India's exposure or vulnerability when it comes to the global trade and Trump 2.0? I mean, he's talking about the currency and, the impact it could have if you de-dollarize yourself. And India wanted to use rupee for most of its trade. Of course, there's that entire, tariffs that he's going to put on a lot of these Southeast Asian companies. Which sectors do you think are the most vulnerable and which could be the top beneficiaries?
Well, if you take a look from India's perspective, right, exports has never been a big story so far for us. But going ahead, they have the potential as we, sort of become a meaningful player in the supply chain. But currently, I think it's some of the agro commodities that could be more impacted by tariffs than anything else.
$35 points higher for Nifty. It's not looking bad at all. Kunal, do you see a trade now moving down as well, which is that high beta, mid-tier banks, high beta IT, high beta PSUs? Will this entire flywheel effect start because Nifty and Bank Nifty have stabilized, because HDFC Bank has moved higher, because Reliance is coming back? Do you see the rally now moving down the ladder?
Yeah, it's very much possible, Nikunj, and it all boils down to the risk appetite and the risk on sentiment from traders. So which was off over the last 30-35 days when the markets were getting into a sharp selling spree, and start of the month of December so far, or at least the end of the November expiry, we've seen the markets stabilize. So when markets stabilize and when stock specific or the market breadth improves, the risk on sentiment generally comes back again, and in that scenario, in that time frame, we generally expect the high beta stocks to do pretty well. Look at the real estate stocks, for example. I think from a point when many of those real estate stocks, DLF, Macrotech developers, etc., these stocks were going through a 15% to 25% kind of a corrective phase. These stocks are coming closer to breakout of the previous swing highs. Oberoi Realty is one of the stocks which is hitting fresh swing high for itself about the 2000 plus mark. So when scenarios improve in terms of risk on mode, these stocks and sectors, they generally tend to do pretty well for themselves. I also believe that eventually over the next maybe few days or over the next 1 week or so, the metal stocks should make a very strong comeback. That's another high beta pocket. which has been a huge underperformer. So I believe the likes of JSW Steel, Tata Steel, SAIL, Jindal Steel, etc. I think these stocks should pick up in terms of price action. So there could be a decent trading opportunity over here as well.
Yeah, and of course, they're waiting for that fundamental news wherein the overall import restrictions come up on as far as steel is concerned. Let's see whether that happens or not. But for now, that's the overall view coming in on the market as well as the metal sector. But time now to take the BDSC trades out of the way. Sony, what's the buy today, sell tomorrow idea?
So it would be in BPCL. Now, BPCL has been consolidating in a range with a good support around 290. There's a resistance of around 300, 301 in futures. Now, if it crosses that level by tomorrow, you can see it heading higher towards 315. So one can buy in futures around 297, keep a stop loss of 290, and a target of 315 to 318 can be seen.
What about your BTSC trades?
So I'll go with the buy on City Union Bank. That stock is looking attractive on the verge of a breakout of the previous highs of 180. So would look out for targets in the range of 190 and stop loss could be kept at 175. And Oberoi Realty is something which I'll be bullish on. The stock confirming a breakout of the previous resistances, and we've seen real estate stocks do pretty well. So would look out for targets in the range of 2200, stop loss at 2000.
Okay. On that note, Sony and Kunal, we let you go. Thanks so much for that. Last word coming in from you, Nitin. Which are those contra bets that you would want to make right now? I mean, cement, chemicals, autos, these have become the so-called no-to areas for quite a few people. Are you looking at maybe buying into some of these?
Well, I think, what you're going to see is the big, after you've seen those GDP number shockers that came out, right? I think what would normally happen is that the whole capital expenditure spending, which has sort of been just 25% of the budgeted amount, should probably come into play over the next 2 quarters. And I think I wouldn't be surprised if you see, the industrial pack, the infrastructure companies, the cement companies actually starting to gain more traction. And so yes, that could be the contra trade that you play, because I think it's very difficult for you to bring consumption back on stream as fast as spending more on capex, handing out more orders, and getting things mobilized. I think that's an easier way to sort of bring the economy back. So I think we will see that, and the government starting to give out orders more aggressively over this next say 4 months before the year end.
Okay, Nitin, thanks. On that note, we'll let you go. Thanks so much for joining us. But with that, it's time to wrap it up on this edition of Closing Trades and sum up what today's day has looked like for us. Let's pull up a Nifty, and what a stellar recovery coming in for Nifty. Roughly 250 points uptick coming in on an intraday basis from the day's lowest point, and right now also 150 point uptick on the spot basis. More than 0.5% gain coming in for the Nifty right now. Let's also take a look at what Sensex is up to. Same moves coming in as Nifty. In tandem, 0.5% uptick coming in, and we've managed to cross that 80,000 level, which we were struggling to cross in the middle of the day. So well, that's the Sensex coming for you as well. Advance decline ratio steeply in the favor of the advances today, so good moves coming on that front. Let's take a look at what the broader markets are up to today, and it's been a 1% rise coming in for both Nifty mid cap as well as Nifty small cap. Good moves coming in, and the broader markets have outperformed the benchmarks after quite some time today. Talk about some individual gainers and losers then. What did well for the Nifty? You have Ultratech Cement, Apollo Hospitals, Grasim. All of these three trading with cuts of more than 3% just intraday, with gains of more than 3%, pardon me. JSW Steel, Shriram Finance, Adani Ports, Tech Mahindra, very stellar moves coming in. However, what was weighing on the index today and causing a slight build of some pressure build up, HDFC Life, Cipla, NTPC, SBI Life trading with cuts of 1% in today's trade. Let's also talk about some individual sectoral gainers and losers. Nifty Realty through and through outperformer today, 3% hike coming in on just that sector alone. Very good moves fueled by Godrej Properties, Prestige Estates, Phoenix, DLF, Oberoi, Lodha Brigade. All of these counters in the green today. Nifty Metal, Media, Auto, IT, Pharma, Energy, Financial Services, all of these in the green. However, what did not do well today and continue to remain under pressure today was Nifty PSU Bank. That index was under pressure, led by the likes of Union Bank, Central Bank, IOB, UCO Bank, SBI and PSB. All of these trading with deep cuts coming in on an intraday basis. You also had Nifty FMCG that has closed the day rather flat. So we'll just see where Nifty FMCG has managed to close the day, but
there you have it, slightly under pressure coming in for FMCG, not much to worry about, but that's how we're shutting shop for the day. Now let's just quickly mark some individual gainers and losers. Dixon Tech has hit the 1 lakh crore market cap today. That stock was a clear outperformer today on the back of Paget Electronics signing a deal for Google Pixel. Nomura Biocall also coming in for that stock, so this one has done well. Aster DM, all eyes were on this stock on the back of their merger with Quality Care. Ola Electric, very surprise recovery coming in on the back of the store expansion plans. You have Swiggy that was up 5% today ahead of results, and also the Bolt service has now expanded to 400 cities. Torrent Power plans up to raise 4,000 crores via QIP this week is what we understand from agencies, so that stock was also holding up pretty smartly. 5% gain coming in for Torrent Power as well. Quickly in focus, Cipla Home First on the back of block deals, RVNL, KEC, Cochin Shipyards on the back of order wins coming in. But well, yeah, this is how we're shutting shop for the day. 0.6% uptick coming in. 24,277 on the Nifty is how we're wrapping up.
If you like this video, then like, share and subscribe to ET Now.